Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. I'm your host, Dr. Alan. Delighted that you've joined us today. Are you a busy professional, passionate about the work of your calling, yet realize that even though you love what you are doing, you're exchanging your time for money? You know that if you were to lose the ability to exchange time for money, your financial well-being will be in jeopardy. If you can relate, I have great news. Steed Talker Capital is an investment company designed for professionals to develop financial independence built on solid, passive real estate investments. Remove the anxiety of an uncertain financial future and go to steedtalker.com. Get your free one-page 10-step guide to passive real estate investing. Enlightened investors, we've all heard the Chinese symbol for crises is a combination of two concepts, danger and opportunity. Although this isn't true of the Chinese symbol, the concept that there is opportunity in crises does hold merit. Here in the USA, we are facing the crises of a shortage of affordable housing. Today, we take a stab at saving America's crises, one mobile home park at a time. Our guest is Ryan Groene, who is tackling this crisis head on. Ryan is a mobile home park owner, operator, turnaround expert. He bills himself as a finance junkie, former college baseball player, recovering corporate America employee, but most of all, a dog and a beer lover. Ryan, before we delve into saving America from its own self-imposed affordable housing crises, share a memorable experience from your formative years that helped you to be the person you are today.
Probably growing up, seeing my parents and my family have a kind of entrepreneurial spirit. I remember as a kid being dragged around to like laundromats, car washes, duplexes, like all kinds of stuff growing up. My parents bought a few things and my dad actually owns his own business today, but there was always that fear factor that holds a lot of us back, right, from actually purchasing something. So that was actually probably subconsciously. I didn't really know it at the time. And I'm kind of recognizing it now that I've gone through it and stuff like that, that just seeing that and being exposed to a different way of life. And then also reading Rich Dad Poor Dad in college was probably the most memorable as far as like the journey to entrepreneurship and my continued journey in entrepreneurship and real estate investing. So
excellent. Well, you have chosen the real estate segment of mobile home parks. Tell us why.
Number one reason is it solves an ever evolving problem of America needing non-subsidized affordable housing, right? There's a huge demand for it wherever you live, specifically in coastal areas or higher, like California, New York City, like higher rent areas, right? And even middle America, right? So we have a product that has we get calls all the time at our properties, a demand and a shrinking supply of mobile home parks. There's about 50,000 parks in the United States. It's less and less every year, either due to deteriorating old owners, passing, the next generation doesn't want it, or it gets redeveloped, right? It gets redeveloped into what better use by what the town or the city determines is better use of that land, right? So that's kind of one of the main reasons is that supply and demand and the simple economics of the actual asset class. And then obviously the financial numbers actually when it comes to investing. For every dollar of revenue we take in, we typically spend anywhere 40% of that. So a higher profit margin like apartments, commercial buildings, and some other asset classes out there. And I'm also not in the business of changing toilets, meaning we own the land, people pay for the dirt, and we don't own the homes 95% of the time as well.
Lots of good reasons for going into mobile home parks. So how is it that mobile home parks are the best solution for affordable housing? There's different classes of affordable housing. There's C-class apartments and various different aspects like that. So why is it that mobile home parks are the solution to the crises?
So let's take your example of C-class apartments or, lack of a better term, Section 8 apartments, right? Where it might be in a C, D-class neighborhood, right? Working area, but kind of still rough, right? Where you don't really want to live if you have the choice, right? Let's say you're paying $800 in rent in a C, D-class neighborhood. Let's say you can move over to A-class neighborhood where the mobile home park, if you own your own home, the lot rent is $300 to $400, right?
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn.
So you have your own home. You don't have neighbors anymore. You're in a better area, potentially better school district. That's our platform as we buy mobile home parks in great areas. So the actual product, affordable, like subsidized or even lower income apartment buildings versus the mobile home parks, the actual mobile home itself, you can park by your door. You can have your own yard. You can have your own house. You don't have to have neighbors above, below you. You can have your own yard. You can have your own dream of Americana, right? On a more affordable scale, right? So most of our tenants and our residents are retirees. They're on a fixed income, or they're starting out in life, or maybe they went through a divorce, or they lost a job, or they're downsizing. There's all kinds of reasons why people choose to live in mobile homes, not just the fact that it's a better product per comparison, in my opinion. And most people would rather choose a mobile home. They just haven't been exposed to it because everybody thinks mobile home parks, they think meth, prostitutes, and just crazy crap going on all the time. That's not the case in 98, 99% of parks. Typically in good locations, it's actually a better product than an apartment that resident could afford in a C or D class neighborhood. So that's actually pretty much the number one reason.
That is an interesting way to look at that. I had never thought of it in conjunction with that you can, at a lower cost, provide a higher quality of living, and also then that is also going to provide you with a higher quality of tenant, even so than what you're going to find in most typical C-class properties.
Correct.
So you had mentioned that the supply of mobile home parks seems to be declining rather than increasing. And clearly that this could be a very significant part of the solution to the crises. So why is it that the supply is declining rather than increasing?
So number one is typically the not in my backyard type of mentality from zoning, which derives from government and even people like you and I that might not want a mobile home park next to us where we live, right? I mean, to be quite frank, not every park is not always, is it okay to have one? Do you want one next door? I mean, that's perfectly fine to say. I mean, we're in America. You're free to choose where you live and how you live. So number one, it's typically the not in my backyard zone. So there's no more zoning being allowed for parks to be developed, right? To be developed with newer homes, better layouts, better potential infrastructure, not actually declining assets that were built in the 60s and the 70s. And, you know, where they're tight, now there are some bigger parks, but the homes were not built like they are today, right? So anyways, typically it's the zoning doesn't allow it. Number two is like the land use, right? So typically the land is actually from a tax point from the city, there's better use of the land from a per acre tax dollar revenue that the city could get more tax dollars if they had an apartment or a single family home development or a mall or some warehouse or something, right? Then they would actually get on a mobile home park. While the mobile home park owner pays taxes, the residents that live in the property, the mobile homes are personal property. So they're taxed at a personal property rate. So if you have a $10,000 mobile home, you may pay a few $100s in taxes per year. Versus if you have a $150,000 house or even higher, they're going to pay real property tax rates. So you have a higher tax per person and tax per acre that the city or county will derive from that land versus a mobile home park, right? And the point of a good city or a good town is to have increased tax revenues. So therefore they can make their town better. They can spend it wisely and they have bigger budgets. That's not always true, but you know, that's kind of the theory, right? That municipalities kind of have. And a lot of municipalities that you see that are typically well run have a little bit higher taxes or tax rates, which they have a little bit more disposable income to use efficiently.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolio selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
That's one of the other reasons. And number three is it's kind of just not a super popular asset class that a lot of people think about, but it's becoming a little bit more mainstream in the last 2 to 3 years. You see guys like Brandon Turner with bigger pockets, and even like groups like Blackstone buying big portfolios, right? They know there's a need in America and there's a dwindling supply. So therefore you have a product that's kind of an endless demand and you can charge what you want, but in the long term, you're always going to have residents as long as you take care of it. And probably number 4 is probably just, so mom and pops that built these things back in the 60s, 70s, they typically still own them. It's a very segmented asset class where you have a lot of older owners that are 70 plus years or older. They've owned it since they began, or maybe their child owns it now. It's been passed down one generation and they're friends with the residents and they haven't increased rents to keep up with inflation or to keep up with modern times. So therefore you have a national average of lower rents, which typically dictates when you have lower rents, you can't efficiently spend to fix things like because infrastructure, CapEx items like infrastructure, the homes, keeping them up, and just different items like the roads and stuff like that. So that's number 4 is you just have an older generation that necessarily haven't raised rents to keep up with modern times, or they haven't taken care of the property over a long period of time because they might have got sick. They just don't live there, so they don't care anymore, right? Just like anything, over extended periods of time, you typically lose interest. And so that's what's been happening as well. So the city shuts it down and they bulldoze it. And, now there's another mobile closed, and where are the people going to go? I don't know.
Well, some significant roadblocks.
Yeah.
At the same time, it clearly could be a reasonable and workable solution to what every city planner, every county planner knows is a crisis. Are they looking at these things as possible solutions and trying to rectify these roadblocks? Are you seeing any municipalities moving in that direction?
Yeah, it's starting to change a little bit depending on where you are in the country. I know a gentleman of Spartan Investment Group, they're developing a mobile home park out in Washington. I think it's a little bit more rural of an area per se. It's not like Seattle, Portland, but it's still a bigger population, probably under 500,000 people or so. But they're developing it the correct way. The city, they're developing it with nice homes, nice streets, sidewalks. It looks like a subdivision. That's the solution, right? You create a product that looks nice when you drive through it and it's got good curb appeal. And then that's kind of the way to go about it. But it depends on where you are. Texas, certain areas of Texas is starting to come around. More than likely, you're actually going to get zoning to add on to your existing mobile home park. That's actually the most popular. So let's say you have a 100 space park. You may have an additional acreage in the back where you can develop another 50 spaces or so. So that's actually more popular than ground up development, but it is changing as we continue to go down this road in 2021. It is changing in certain municipalities, but most of the time, 95% of the time, zoning's like, nah, shut it down. It's not worth it. Or the places that it is worth it, there's not enough demand or enough people where they have a high enough income to afford like a newer product, right? Because some of these mobile homes that are newer, depending on where you are in the country, can cost anywhere from 40 to 50 grand. And to go get a loan on that, somebody that makes $10 to $12 an hour, they might be able to afford it, but typically they have really low credit. And that's typically how we base things in America, is all based on credit. And if you have a 500 or 600 credit score, you typically can't get a loan at a decent rate. So that's stuck between a rock and a hard place, unfortunately. But yeah, I am seeing it change a little bit, but it's a slow uphill battle. That's for sure.
Well, we do need a solution, and I don't really see too many on the horizon. The crisis continues to escalate and grow, and there are various different kinds of solutions being tried out, but nothing on a massive scale, which is what we need to find.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time.
Well, how does one get into mobile home park investing?
So there's a couple of different ways. One, you can go out and just buy a park, right? You knock on the door, just like anything. You just got to find the owner. You got to ask them. It's got to be the right timing. Hey, you want to sell? And then you buy it at the price that works for both of you, right? That's the easiest. When I say it's the easiest, it's definitely the process, and that's a whole other conversation. But that's number one. Number two is to invest with guys like myself or other people that you may know, like you and I, Alan. Let's say we both have $100,000 and I got a run partner that know how to run parks, and you're an active part of it as well. You just JV, joint venture with people. Another way to do it is to invest passively through syndications or funds. There's plenty of opportunities out there. Typically, they're for accredited investors only, but there are certain dynamics like what I was talking about with you and I, Alan, that you typically don't have to be accredited, right? If we just joint ventures on a deal. So you could be an LP on a deal, which is a limited partner in a syndication. Typically, there's all kinds of operational people out there that raise money that way. So that's the third way. And fourth is just to start at the bottom by flipping mobile homes. That's actually a good way to get into it, just to experience the product itself. You buy a home for a few $1,000s, put some money into it, and you either do like a rent to own or you sell it for cash. And it's just like flipping houses, just at a smaller scale. And you don't have as much money on the line as maybe a single family house, right? But it's still the same process. And then you trade up into a mobile home park eventually. That's actually how I got started. I looked at flipping mobile homes, but I didn't actually do one. And then I kind of went down the rabbit hole of who owned these things. But that's kind of the three ways to get involved with owning a mobile home park.
Well, how does the deal typically work out with purchasing a mobile home park as compared to how it would with an apartment complex?
It's the same structure, right? Let's say you're going to go buy it on your own. It's the same as any other asset class typically, right? Let's say the purchase price is $1 million. You call around whatever bank and you put down your 20 to 30% down, and then you have a loan on it, and then you go through the whole lending process. That's the most common, right? You go to a local commercial lender. They look at you as the borrower, you put the cash down, and then you run the park. That's the easiest. You could pay cash for the deal. And then some creative financing options out there, which is still pretty popular, are seller financing. The actually owner finances the property themselves, because it could be a turnaround or value add project where it may not qualify for some debt, or they even carry a small portion of it, so it helps qualify. And the last option is a master lease option to purchase, right? So that's properties that will never qualify for financing, or the owner doesn't want to take a tax hit, or they don't want to finance it because they still have existing debt on the property. So it's kind of like an assumption or a subject to kind of, but you can do that with apartments as well. Is where you put down a security deposit and then you run it for a number of years. You pay the owner a lease payment, and it's kind of like a triple net lease essentially, but you're running the property and you're profiting off of it. Typically those deals, you either have to be able to raise rent quickly or create some operational efficiencies that they weren't doing. So that's a pretty typical structure as any other apartment deal or any other investing. It's just a different asset, but the same process.
In terms of the financing, the lenders, how do they look at mobile home parks as opposed to apartment multifamily?
So there's different levels of financing, just like there is with apartments, right? So the larger the deal, typically the easier it is. So the larger deals, 5 million plus or even 3 million plus on the loan size, you would go to agencies like Fannie Mae and Freddie Mac. They do lend on mobile home parks, great terms, non-recourse, long, because they have a vested interest and they actually have to lend out money to affordable housing. So they have a certain dollar amount that they have to. And then there's conduit and CMBS debt. That's like your Wall Street institutional money. Mobile home parks do get financed that way. And then even larger banks like Wells Fargo, Key Bank, they typically are involved in the CMBS and they'll lend on portfolios. That's typically for larger transactions and larger institutions. And then there's the second tier, which is just credit unions and commercial lending, right? So your deal's typically probably under $5 million. You just pick up the phone, say whatever commercial lender is in the area, do you do mobile home parks? Yes or no? 8 times out of 10, they say no. Once you drop down to a certain level, it is harder to get financing. It's become easier over the years, but A lot of lenders don't like the asset class overall. They just don't understand it typically. It's not that the default rate's high. It's actually the lowest among any commercial asset class from '08 to now during the Great Recession, aside from self-storage. They just don't understand the product. That's typically, they just don't understand it. So that's the second tier. And then the third tier would be financing would be like hard money or somebody from a private individual that would lend on the product as well. So financing is the smaller, the harder typically, and the larger is the easier. And the mid-tier stuff, you just got to pick up the phone or you go to a loan broker and say, hey, can you help me with this? Here's everything. And you pay them a point or two and they'll do their job typically, and they'll help you because they know everybody and they save time. And they do cost you money, but they're good at their job. And it's like paying a car mechanic to work on your car, right? You may know what you're doing, but they're saving you time and you can use your time elsewhere because that's what their specialty is. So it's a bad comparison, but that's a couple of the financing, and it is tougher, but it's becoming a little bit more mainstream in the lending world.
So you said the smaller it is, the harder it is. So what do you classify as small? What do you classify as mid? And where does it go into the large?
I'll break it into two segments because it depends on where you are in the country. I would classify anything dollar value wise, $1 million and under, like 500,000 to $1.5 million transaction size is like probably small to mid. And then mid to large is anything 2.5 to 10 million, and super large is 10 million and above. Under 500,000 is typically pretty small. It's harder to finance. It's harder to even be attractive from a numbers standpoint a lot of times because your margin of error is a lot higher on smaller deals, right? If you have 10 units and 3 move out, that's 30% of your revenue. And the bankers see that as well. And then aside from the dollar transaction size, the unit count, typically anything under like 30 units, I would clarify as small. 30 to 100 is probably mid to kind of starting to get in that larger. And 100 units and plus is typically what institutions, larger guys like some funds and myself even are looking for is 100 units and above. So unlike apartments, 100 units is kind of the cutoff where a lot of people are looking for. They're like, I need 100 units or more, which does make sense. But you don't have a lot of assets out there that are like 500 units or 400 units mobile home parks. They're very few and far between. And a lot of them have already been traded to the REITs or even larger private equity institutions. So that's how I would break it out. Dollar size and then number of units as well.
Number of units, right. Well, before we go into our last segment, tell our viewers and listeners how it is that they can get in touch with you.
Yeah, so you can go to my website, which is themobilehomeparkinvestor.com. I'm sure Alan will be a gracious host and put it in the show notes for you. And you can contact me through there. I'm on all social media as well, LinkedIn, Facebook, Instagram, just my name. Feel free to reach out to me. I'm typically readily available. I'm happy to talk parks, happy to look at a deal, happy to go over things if you're looking at a deal. And typically I like to give back a lot of my time just to newbies or even people just looking to get into the industry and invest as well.
Well, excellent. How long have you been in the mobile home park industry?
I've been in the industry since 2015. So not that long overall, but I'm a full-time mobile home park investor and operator, and I've been around 20 plus parks, thousands of units, both from the operational level and also buying.
And are you focusing your purchasing in any particular area of the country, or you purchase all across the country?
I typically focus on the Midwest and Southeast in metros that are 50,000 and more, and typically growing areas. So somewhere like where I live in Charleston, South Carolina is where I would want to buy a park, right? Growing areas in the Southeast, that's typically what we're looking for is in the Midwest and Southeast. But I will go outside of that as long as it's not like typically like Illinois, New York, or California, just due to some of the bureaucracy and governmental stuff that I just don't like to get involved with. It's just another layer of owning a mobile home park, and it's easier to operate in other states. So that's why we focus on those.
Well, you've talked about all of the pluses and the good things about mobile park ownership. What is a downside?
Is sometimes the stigma. Stigmas do sometimes exist for a reason, right? So the downside is kind of the stigma at times, right? And some of the resident base, if you don't buy in good areas, when we take over a property, probably the toughest part to turn, right? Because, turning the resident base is a process and it does take time. Number two is probably the stigma, but it's from the governmental agency's perspective, right? So governments sometimes want to shut down the park, even though they're legally not allowed. They try to do everything in their power just because they don't want it. So that's probably one of the biggest downsides, actually ahead of the residents sometimes. when you take over a property, or even when you're running the property continuously, is the government. And the cities and the towns and the counties, they just don't want the parks. And they'll do, like, if you go to bring in a mobile home, they'll tell you can't. And then you're like, well, hey, I'm grandfathered, or here's the laws. And sometimes I have been lucky enough, knock on wood, I have not had to sue a city, but I do know people that have had to sue cities to basically prove their point that the city is overstepping their boundaries and they're doing something that's illegal. And then probably the third is, it's becoming a lot better, is financing. That's taken a huge step forward in the last 2 to 3 years for sure. Because when I got into it, it was like hard to get them financed, especially under $1 million. But financing definitely has come a long way. There's agencies like Fannie and Freddie that's way more mainstream, and they'll lend on it. Well, they actually have a duty to lend on it. So that's probably the biggest downsides. There's not many. And that's why I like the asset class, is because it's a contrarian investment, right? When times are bad, it's even better because people need affordable housing, because people that were living up here now are down here. And then during good times, unless America got super rich, which we're not, wealth is people are getting wealthier and people are getting poorer. They need somewhere to live. So that's kind of the hedge against, unfortunately, America getting poorer versus richer on the individual income level. So those are the downsides, but mainly it's government and financing.
Interesting perspectives. Well, let's go into our last segment and share with us one of your most difficult setbacks and challenges that you faced in life, and how did you come through that time, and what have you learned from that?
Probably one of my biggest setbacks in life was, I guess, going to college, maybe even. Meaning I left college with probably, like most millennials, $50,000, $60,000 in debt, went to work for a corporate finance job, wasn't making that out of college right away. I did work in the finance world, but, stepped up relatively quickly, was not going forward in the entrepreneur journey quicker. That's probably my biggest setbacks in life, was not starting sooner, even though I'm 31, so I'm still relatively young, but not starting sooner. And actually investing most of my money in a 401k, which I emptied to invest. So I paid all those taxes, which I should have just been investing elsewhere versus doing that. But that's probably my biggest setback so far. I haven't had a ton of setbacks. I've had a relatively grateful life.
Well, imagine, and this may be hard for you to do as young as you are, but imagine you have come to the end of your life, and as you lay on your deathbed, what will you look back on with your greatest sense of satisfaction and fulfillment?
Well, I don't have kids yet, so maybe it'll probably be my kids, I'm guessing, but that's what most people say. But honestly, it'll probably be that I got over the fear of failing, and I got over the fear by realizing, sitting in a corporate office and saying, hey, if I fail, I'll still be, 30 years old. I can always go back and get another job. There's always another job. There's somebody willing to pay you. And I think that'd probably be my greatest accomplishment, or greatest, I guess, thought when I'm sitting on my deathbed. And something I think about actually typically daily is, what am I doing, or what should I be doing, to where when I do die, I didn't leave anything kind of left behind. So it would probably be actually going for it and just kind of throwing it all in and going after the entrepreneurial journey and owning businesses and providing, affordable housing. But aside from my kids, it'll probably be the fact that I kind of lived on my own terms, I guess you could call it, or tried to.
Well, I hope you have a long and fruitful life. Thank you for being on the show today, Ryan, and thank you for sharing your wisdom and expertise.
Thank you for having me on, Alan.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our effort to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at steedtalker.com.